I want to make sure we address the question in the chat that we received, and it's definitely a timely topic. We've heard much about AI, machine learning, chat GPT in the first half of 2023. I believe chat GPT has 100 million users, which is pretty unbelievable. But we do have a question in the chat, and of course, I believe now it's just disappeared, but I'm going to do my best to summarize it, which was basically, do we think that, or how do we think that AI will impact the markets, the economy, society in general? Certainly, this is a question that I think everyone on this panel probably has some thoughts to weigh in on. John, as somebody who referenced this in our most recent quarter letter, do you want to lead us off with any thoughts on this?
Sure. So when I wrote the last quarter letter, I thought, well, gosh, wouldn't it be easier just to have Chat GPI write it for me? So I asked Chat GPI to write me a quarter letter about whether one should invest in the style of Shakespeare. And it started, to invest or not to invest. That is the question. It didn't take me long to realize that wasn't going to work. So I threw it out. But what we've seen with these tools, which continue to improve, is they tend to do a good job of creating a summary around a topic, a really powerful summary that gives you something to work with, should you choose to use it. The better ones will actually reference their sources, so you know that you're actually using real data behind whatever it is it's creating. There are well-documented cases already with regard to ChatGPT and other tools creating documents that are factually incorrect. That's a problem. When I look at how AI is going to impact our business, over the course of 40 years, we have seen new tools arrive, each one of it which makes us more efficient and effective in helping our clients along their preferred course. Whether it was the ability to actually have stock quotes real time as opposed to delayed or calling a broker to get them, whether it was the ability to have a system where we could look across all of our client portfolios at once, tools to help us see if our portfolios are out of balance. There's a tremendous amount of improvement that has happened over the years. Artificial intelligence will be a continuation of that. I think it will prove to be a useful tool set, but like all things investing, the more people use something, the more you get regression to the mean. And so the more the effectiveness in terms of excess return gets washed out of it. The bigger issue is that technology so far has been exceptionally good at manipulating numbers. It's not so good at understanding emotions and behaviors. Earlier in this conversation, Mike brought up his Dutch heritage and said, I know the math tells me I shouldn't pay off my mortgage, but darn it, who I am is someone who doesn't want debt. How is artificial intelligence going to capture the reality of the human experience and put that into a financial plan or a financial algorithm? It may get there. Right now, I think it's a long way from there. And I know each of us probably day by day, our own perspective will change with regard to what we think is the best course. Manipulating numbers and even manipulating text is relatively easy compared to trying to understand the human condition. And so my take is it's going to be a really functional tool for us. But we will be unwilling to cede total control to it. An example I read about several years ago had to do with self-driving cars. If you have a self-driving car, you have to program that algorithm. You're driving along the road and suddenly there's a truck, you're going 70 miles an hour, there's a truck stopped in front of you. You have the choice of going off the bridge into the ravine, almost certain death, if you turn left, or you have the choice of running over 6 pedestrians if you turn right, but you survive. Now, what are you going to do? Do you want that programmed into your system? Do you want your system programmed such that save the maximum number of lives? I don't have the answer to that question for you, by the way. That's up to each person to decide. However, when you get into the AI space, there is that human element of relinquishing control that I think we're still a ways from the willingness of most of us to do that. So, at least in our investment space, I think it's going to be a useful tool, and it will become another powerful tool in our toolbox.
Thanks, John. And for those of you who haven't read the quarterly letter, I encourage you to do so to hear more of John's thoughts on AI. Before we move on, I just want to open it up to others on the panel for thoughts on how AI might impact, the economy, labor market, society in general.
Yeah, I'll just take it back to more of a macro perspective for a moment. And I think change is hard. Change is scary. Technology, in particular, can be scary as well. And I think oftentimes that fear, at the center of that fear, is how is technology going to potentially impact my employment, my job, and therefore the fountain from which my income flows, and therefore my economic activity and my stability and my financial security. And that's completely reasonable, right? Because what we always hear and what we see in the headlines is that AI or whatever technology you want to insert into that headline is displacing people. But the way that we think about the potential impact of AI on jobs and the economy is, if you'll bear with me for a moment, imagine the arc of job creation in the U.S. economy since World War II. And if I could do a screen share, I'd show you the line. It's pretty much straight up from the bottom left to the top right. And to give you a numerical perspective, I think right after World War II, the U.S. economy employed about 45 million people. That was the total non-farm payroll jobs numbers, was about 45 million people. Today, it's almost 160 million people. So it's gone, pretty much straight up. We've had recessions that have brought jobs down for, a short period, but it's gone straight up. And over that period, if you had that in your mind's eye, that line going straight up, you could plot all along the way different technologies that were going to displace people and change the world as we know it and take jobs, factory lines being created, automations, the transistor invented, the GUI adopted in the early 1980s, computers becoming mainstream, the internet taking off, mobile technology, cloud, e-commerce, etc. Computing has advanced at such a fast pace over the last many decades that there's always a reason to be concerned about technology coming in and displacing people. And yet, all along the way, we've seen more jobs created on net in the US economy. We've seen rising prosperity, we've seen rising incomes, we've seen rising asset values. So, technology as a tool, as John mentioned, is plays an important role in contributing to overall productivity growth, which is an important structural element to economic growth. But it turns out that, over time, the economy is dynamic and we usually adjust in a way that is beneficial on net. And our view is that AI will be no different. We think that 10 years from now, 20 years from now, the chart for US jobs and aggregate income and all of those things will continue to be up and to the right. So we're optimistic that AI can be a benefit to society. It can be a benefit to the economy. Sure, there are going to be some jobs that are replaced. We're going to have to retrain and retool. But overall, we think it's going to be a good thing going forward. There are estimates out there that say that it'll add 4 to 5 trillion to global growth over the next decade plus. And that's reason to be optimistic. So we'll see where it goes.